Okay, should be live. Good morning. Good morning, Europe. Just so you know, the United Kingdom has a bank holiday today, and there's no FTSE open to trade. The DAX is trading. Yeah, so there you go. The markets will open in approximately 30 seconds. Tonight, we will release a new version of this software, and it will have an attempt to do it will an attempt to have an overnight range, and also will have a bar counter, which will enable me to highlight certain bars easier by referencing what count they are. So here we go. The DAX is opening more or less unchanged. In case you didn't spot this, but the Dow index is currently gap down by about 200 points. So I imagine that the DAX is gonna come off, but the DAX had a pretty decent push higher before the market opened, as you can see here, and the DAX is more or less unchanged. I don't think the holiday in the UK is going to affect the DAX. It's usually the other way around. If the DAX is on holiday, then the FTSE is less inclined to make moves. So we are trading above the overnight range, and if you look at the big picture, especially on the daily chart, you'll see that the DAX is incredibly strong. What's interesting about Friday was that it was actually an acceleration of the trend. So if you notice the length of the daily bars, you had the longest bar, excluding these bars down here, and you had what, 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive bull closes. I don't know if that's a bull close there, or is that the holiday? I can't remember. It could have been the 1st of May, isn't it? Where it was technically. No, it wasn't. That was the 28th. Anyway. So it's fair to say that you are contending with the overhead resistance before we sold off in early April. We had a double top, but within an already established trading range, and it seemed as if that trading range was going to hold until all of a sudden we saw the acceleration, and you had 2 really violent days and then recovery. So I don't think anybody's going to win any award by stating that we're going to see new all-time highs in the DAX, and indeed anywhere else. It's my personal belief, but that was always my personal belief. I didn't think that a bull market like this was going to end on something as flimsy as a knee-jerk reaction. Needless to say, but I will state it, we are day traders, and it's other perspectives that will drive us. Excuse me. If you're interested, I'll post. Sorry, that was not a democracy, but so I'll do it anyway. I'll post the DAX this time last year when the UK was on holiday, so you get a sense of what could happen today. So this is how the DAX was trading last year. When the FTSE was on holiday. You're probably going to have to take that first 10-minute bar with a little bit of a pinch of salt, because e-signal as a charging package, I'm not so certain that that first data is correct. But you can certainly take the second one for gospel. And so on this particular day, you had 1, 2, 3, 4, 5, 6. So you had an hour low on the 6th 10-minute bar, and then you began to see consecutive bull bars with close at the high. Whilst before that you had, to a large extent, an overlap. Lots of overlap bars in a relatively tight channel. Of course, the past never repeats exactly, but it was just sort of give you an idea. I'd like to show you how the current chart looks without all the overnight range. So this is what the current market looked like. So here's trading on Thursday, here's trading on Friday, and right now the DAX is trading somewhere around here, which is at the high end of the range. I wish there was a function that guaranteed one always drew straight lines. Huh. So we just double top on the overnight range, and we somewhat filled that. I wouldn't say the gap, but there was an opening gap when the DAX futures opened earlier in Asia. Sellers came in for a double top at 121, and I'm just waiting. either for a school run or aggressive school run, depending on what I see. But I imagine that buyers is going to step in and attack 23,125. Friday's high was 154. So you can see it on an hourly chart. That would be a more interesting target. So we're completing the first 10-minute bar momentarily. Perhaps that's not so interesting just yet. I'm just showing you last year, just as a reference point. So we're going to second attack, which was what I would have expected. So for me, what's going to be interesting is, are you going to see sellers here? I could certainly be interested in being a seller above prior bar high at 22 for a double top. I want to show you what that could look like. So I'll be selling here with in smaller size, and I'll have a stop loss. I'll try a stop loss 30 points away. So what I've attempted to do here is to bet against a breakout, selling a double top. That's one of those trades where you really want to try and move your stop loss down, because it's on Monday morning, and I'm most certainly trading against the prevailing momentum. Let me just post that in Telegram, what I've done. I just fancied getting a trade on. But I did it in smaller size. Should the DAX begin to trade down below 23,100, then I could begin to add to the position. To show you the account, it's a really small size compared to my account, and that doesn't even reflect the real account size. It should be 55,000, 53,000. I think it's more. What is the balance? 33,000. So 54,000, which of course started from 10,000. So say, for example, that the DAX had a closed 10-minute bar. I would have put the stop loss a few points above the high of the 10-minute bar. But as you can see, I still have to wait 7 minutes. And this is still an iffy trade. I mean, it's a double top, but it's a double top with me definitely fighting the morning momentum, which is also why I have lowered the size, fully mindful that I'll be betting against the prevailing momentum. And that momentum was sort of initiated by the fact that several things. One is that the US markets are gap down, and in spite of that, the DAX is still pushing higher. So that's one thing favoring higher prices. Another was that we had a much lower prices during the night, and we're now trading at the high end, and we're trading above the close on Friday. So you may say, well, why didn't you just go long? And the answer to that is because I felt that my stop loss on the long side was a little more undefined, whether to put it down here around 60, in which case I would have had to risk 60 points if I was buying a breakout above the opening high, plus a few extra points. So sort of on the balance of how much I want to risk versus how much I could make, I decided to try a short. But my psychology is giving the game away because I'm doing it in a smaller size. So I know that I am not as certain about this. Otherwise, I would have traded in a full whack. So if I was to get stopped out of this with a full loss, it would represent 0.2% of the actual account size. So 0.18 exactly. Do like this is like 100 divided by the account size. I just put it as 55,000. Represents a 0.18% risk. Okay, so DAX is just pulling back now. What is interesting for me now is that if I had not been a seller in a position, I would seriously have considered being a buyer here. Why? Well, because we are in a bull trend and we just pulled back below prior bar low. Do you see that here? We just pulled back to prior bar low. And you will often see buyers stepping in, including myself. So I'm extremely mindful that even though my position's in profit here, if I hadn't been in a position, I would most likely have been a buyer here. If I had been a buyer here, then my problem would have been more akin to what kind of stop loss do you need for that? And I can probably move my stop loss down just a little bit more. So I'm just risking 21 points now, but the movement of stop loss here is going to be fraught with difficulties. And there was a part of me that were actually fancying flipping the switch right here. But let's see how this plays itself out. Much depends on what the 10-minute close will look like. And that's what the 10-minute bar looks like right now. So if we were to close here on the 10-minute chart, the current high is 133, 23,133. Currently trading at 122. So you already see that the ranges are relatively small from the first opening bar. But buyers definitely stepping in below prior bar low. You see that right here. But if we were to close, I would move my stop loss, say 5 points above 133. In fact, that's one thing I could actually do right now. So 133 is the high. I'll put my stop loss now at 138. There we go. So my stop loss is now reduced from 152 down to, oh, don't think it registered my stop change. There we go. Actually, so it should have been 138. It says 139. Now let's watch the 5-minute chart, because we're coming back down. And I'm not saying that a close below 114 is going to be overly meaningful, but it probably does mean that we need to see another negative bar. Could you excuse me for 1 second? I really badly need a wee. Sorry about that. Right, so while I was away, I was stopped out on my DAX with an entry at 122 with a stop loss at 139. So I risked 17 points, and I knew that the problem I knew I had was that when, and I said I would have been a buyer myself, would have stepped in below prior bar low right here. So when this bar here went below here, had I not been on the short side, I would have betted on the long side right here. Which actually would have been a much better trade. It would have meant a long position around 112. If I'd executed that, I would have had a stop loss probably here somewhere, but not necessarily all the way down here. So the stop placement, it was correct of me to move the stop loss a few points above the prevailing 10-minute bar. It's a good approach to moving stop loss, is to look at a slightly higher time frame than the one that you're trading at and attempt to move the stop loss up or down in line with the market's momentum, because it's rare. I'll show you. here. Probably not the best of example on a non-farm payroll Friday, but say for the sake of the argument that you were long in this area here, and then the market closes on a high, stop loss at a minimum should now be here below the low of that momentum move. And then I use this philosophy that every single time the market makes a new high, as it does here, I would move the stop loss up. Obviously it would have meant that this bar here makes a new high above the previous high, that my stop loss would now be here, and obviously on this example I would have been stopped out, but nevertheless I like that approach to moving stop loss. As I said, non-farm payroll Friday is perhaps not the best of example, but that doesn't really matter. The principle holds. So let's look at where we are on the daily chart. We are above the high The high was 154. We've gone 176. And I have 4 minutes until the school run bar is complete. That's the school run bar trying to form right now, or is forming right now. So I have updated Telegram now. Stop would move to 139 and stopped out for minus 16 in 50% size. Which is actually, it would be wrong of me to say, oh, that's a small loss, because it feels contrived, as if I'm trying to justify the loss. I would rather I would have been more pleased with my trading performance if I said I bought below prior bar low. But at the time I was already in a position, and I felt more committed to that, because at that point there I was about 15 points in profit. Down here I had a short from 23. It went 08. What has happened now, which is interesting, is that the market has taken out Friday's high and quite forcibly is trading back into the trading range. So I don't necessarily want to be a buyer below prior bar low now. We got 2 minutes left for the current bar to finish, which would also include the 50-minute bar. And you see very clearly what has just happened here. You're taking out what have been of orders above yesterday's high, Friday's high, and we're trading back into the trading range. So Sergio is saying, why didn't you revert? Why didn't you reverse? I think what he's meaning, and close and open the long. And Sergio, because I was emotionally committed to the short side. Simone, who has just written to me, as I stated earlier in the post, there will be a new update released tonight of the Trade from Chart software. Simon, I don't know if you're actually just writing to me and you're not tuned in. I get a sense that you're not, and so you're not listening to me. So if my screen looks different to yours, it will be because I'm on a different setting. So my Trade from Chart is version 1.4.2, and you can just click on that Trade from Chart logo and you'll get the essential information. Yeah. But we'll be releasing a new version tonight. Okay. So the school run bar has completed, and it calls for a long above Friday's high and current day's high at 176, and a short below 106. The problem with the short side is that the short side would trigger inside, or no, actually it wouldn't. It wouldn't trigger inside the overnight range. It would trigger outside the overnight range. But after we just taking out the highs, yeah, I still think that we'll see new highs. Well, let's see how this unfolds. I started watching Al Brooks's presentation from the 1st of May again. And I got 5 or 6 minutes into it when all of a sudden I had an idea about how to trade gaps. Instead of watching the presentation, I began a research idea that I had. The essence of the research was a gap that takes place. There are, as I saw it, or the idea was, there are two kinds of gaps. There's gaps that will take place within the confines of the previous day's range. So there might be a gap up or a gap down, but it's still within the context of the previous day's trading range. And then there's gaps that takes place opening outside of the previous day's trading range. And depending on that, from the research that I did, they have to be traded differently. That was a really original approach to gaps, addressing it from the point of view of, well, is it taking place inside or outside of the previous day's trading range? So if we assume that this 78 here, 76 is a high, and it could be a major morning high, then it would mean that we would have to start thinking about selling short the DAX, perhaps above 151, which is the current bar high. Obviously, that's making an assumption that all we did here was to clear out liquidity above Friday's high, and now we're trading back into the range. But so far we got two-way trading and that's manifested in the overlap bars. And the 15-minute bar better explains the breakout nature. If I double click there and I double click there, then you'll see it. So I might actually take a chance and be a seller again above 51. But I'll still do it in smaller size. But that's making an assumption that that was a significant high we just saw at 176. Rightly or wrongly? If I'm right, then I would add as a school run short. Otherwise, I would probably have a stop loss up here around 175. And I think those who think differently, they would be buyers upon 151, thinking we've got to see new highs. So here's the 30-minute chart. If you use this software, if you hold down the shift button and move the mouse, you will see how you can place orders. And if you hold the control button, you'll see how you can place orders. So shift is buy button, so buy orders, and control is sell order. So just for laughs, I could show you how quickly I can place a series of orders much quicker than I would be able to using the normal trading ticket. I wouldn't be able to do it as that quick. I would have to go in here, press the order, then fill in the limit. Here I can just do it really, really quick. And then I can control them all from here. See that? I can just easily change the orders, or I can delete them all. And there you go. Bang. That's what's so cool about this software, in my humble opinion. And it has many other functionalities. Feels like a salesman. I'm not. It's a free piece of kit. Okay, so we're pushing down towards the low end of the breakout. School run short comes in at 06. Imagine buyers are going to attempt to hold it here, or bulls are going to be attempting to hold it here. So it might be worthwhile placing a long position if I can get a fill around 124 for a push back up towards 178. Of course, it's still going to put me in the same position as before. Do I want to now be a seller here at 150? So the market just went below 129, went to 126. Scalp was picking up below prior bar low. I a while ago decided I didn't want to be a scalper on YouTube because I felt that it would encourage over trading, and I felt that it would be better if I showed or showcased trades of some duration. But as you can perhaps gather, I'm perfectly adept at actually just reading the very short-term price action. The problem with scalping, I think, is the over trading aspect of it. Your mind almost becomes infused in, or soaked in dopamine because of all the action that you are undertaking. And the second one is, when you do have a losing trade, you have to have a rigorous stop loss discipline enforced, because you're gunning for 10 points. So you can't have a stop loss of 40 points. Well, you can, but mathematically it doesn't quite add up to do it like that. So coming up to a trading short idea, which would be around, it's not a great fill, but I've shorted it here at 47.5. What I really wanted to do was to short it at 51. So the idea here is that the market is already developing some inertia. Where's my stop loss? Where is my stop loss? Obviously I won't need a 120 point stop loss. That's just sort of a default stop loss size. So I'll put my stop loss at 30 points away, so just above the old high. Let me just post that in Telegram. So there's the stop loss. Always difficult to know exactly where to place a stop loss when you are within the context of a trading range. Maybe it shouldn't be all the way up here. Maybe it should just be here. Risking, so yeah. I can go on a larger time frame and I say, okay, the current 10-minute time frame says 151 and 150. So why don't I put a stop loss at, say, 162? Yeah, that had left me with a 14-point stop loss. When you look at the DAX on this particular trading day, it's equivalent, and as reference to the UK markets being closed, you could see that after the initial surge higher, we developed a tight trading range, like a channel over the ensuing 10 minutes, 20 minutes, 30 minutes, 40 minutes, 50 minutes, 60 minutes. And while nothing repeats exactly, it does seem to make sense to perhaps be nimble with the positions and take profits as well, as and when it affords you to. So it seems like that every single bar just goes below prior bar, goes back into the range, go below prior bar, go back into the range, go below prior bar, go back into the range. And it's not until we are about an hour in to the session that we actually begin to get some kind of meaningful move. What I'm going to do, which I think is wiser just in case, is I'll move my stop loss to break even. So I was 10 points in profit, and now I just move the stop loss to break even. And knowing full well that I could probably scalp myself to more profits if I'd used that approach, but I am okay with just saying, right, let me just put the stop loss to break even and let's see if we actually get a meaningful runner. That's also the point where I, as someone who trades with you publicly, have to balance my time out, thinking I don't really want to sit here for the next 2-3 hours waiting for a move that may or may not happen. I would perhaps rather just say, okay, the UK holiday seemed to have affected some activity in the market. Although it's not entirely dull at all, it is okay. And it's fairly predictable trading range right now. So I was stopped out for nothing. So I've had 2 trades. One was a break-even trade. The other one lost me 13 points, 16 points, sorry. The irony is that the first trade had about a 13-point profit, and the other one that I've just been in here also had a 10-12 point profit. You should be able to see what I'm doing here is simply just attempting to trade off the highs and lows. I complained at the time that my fill wasn't brilliant. I was hoping to get a fill at 151. The market never actually made it to 151. And I executed a short at 147. Market came down to the low end of the candle around 131. And it should be clear to anybody right now that we are in a relatively tight trading range. So there you go. I'm going to attempt a short again here, again in this smaller size, this time at a better fill. I'm going to put my stop loss at 185. I should really change that default to, I think, a little less. Where we go, 185. So the bulls are clearly trying to push for new highs, but the bears are picking off the ranges now. Yeah, do you see that? And so that candle that we just saw here, it feels like, oh my God, I'm selling short in something that is now pushing higher. But just look 45 seconds later. It's so important to remember inertia in the market, and I'm already able to move my stop loss to break even. Anyway, so it might be fancy trading skills, but it's not exactly profitable if I'm not taking my short-term profits. So what is it that I'm hoping for? Well, what I'm hoping for is that this high that we saw earlier was actually a significant high based on what I see on the daily chart. The daily chart being that propensity to take out previous day high. I think I showed it better on a 30-minute chart where we took out the highs from Friday night and we're now trading back into the range. So I'm betting that that's a major high and we're now going to see lower prices. Now I was taking a couple of attempts too. And so even though I could cover the loss from my earlier trade, I'm not going to do that. Rather, what I would like to do is to bet on a further deterioration, but with a stop loss now at break even. So that's sort of an approach to perhaps taking out a leaf of what Al Brooks, Tim, Brad, and Rose are doing. I can do exactly the same thing. I don't, because I feel that there's just a whole lot of talking, and my emphasis is actually on making money and executing trades live for people to see, rather than just trying to explain the academics behind price action. But that's not to say that I can't do what they're doing, but I'm not in any shape or form taking anything away from them either. I was massively impressed with what I saw on the 1st of May. I just thought it was amazing. So I'm going to get stopped out again, and I think I'll just retreat, because otherwise it just becomes this scalping session where I'm chipping away and not actually that interested in that. I want to get a runner, a proper runner, stopped out for 0. I am calling it a morning. Hope you enjoyed the commentary. You certainly So I just made a comment here. I'm calling it a morning. I hope you enjoyed the commentary. You certainly could have made some points to scalping with me if you, unlike me, had decided to pick off the ranges. I, on the other hand, was trying to get a runner going, which I could add to, and it didn't happen. So I had several shorts that were stopped out for 0, and all of my trades today was like 50% trades, just in recognition that I was unsure what kind of morning we were going to get when the UK markets were closed. So I'm ending up with a minus 16 points in the DAX on half size, which, let's face it, I must have made 3 or 4 times that in open profit, just letting it slip away. But I'm absolutely fine with that. It was lovely to be here with you. And I will see you for the US session. You take care of yourself, and thanks for this morning. Bye-bye.